Welcome back to the Deep Dive. Today we're diving into the discount retail world.
Ooh, fun.
Yeah. Comparing Dollar General and Five Below.
Okay.
And we're going to be using a Motley Fool article from January 2nd, 2025 as our guide.
Okay.
And by the end, hopefully we can figure out which one might be the smarter investment opportunity.
Sounds good.
All right. So,
What's fascinating to me
Yeah.
is how both these companies have kind of evolved beyond their strict price points that they were known for.
right.
You think about it, Dollar General, right? It's right there in the name,
Yes.
dollar. But the article points out that almost 80% of their products
Wow.
are actually sold above $1 now.
Okay. So that's a pretty big shift.
Yeah.
And Five Below, they've got their Five Beyond section now for things that cost well more than $5.
Mm-hmm.
It makes you wonder if they can even really call themselves dollar stores anymore, right?
Right. It really begs the question of what their identity is as discount retailers if they're not actually selling everything
Yeah.
for $1 or $5.
Yeah.
And this leads to another interesting point, their target audiences.
Okay.
The article highlights how Dollar General is really focused on providing essential goods,
Right.
particularly in rural communities where other retail options may be limited.
So it's like they're filling a need, almost like a lifeline of
Right.
those communities.
Yeah,
You're probably not going to Dollar General to find the latest trendy gadgets or yacht.
exactly. You go there for those reliable everyday items at a decent price.
Mm-hmm.
Five Below, on the other hand, leans towards a younger, trendier crowd.
Okay.
They offer that mix of practical stuff and then those fun impulse buy type items like trendy phone accessories, room decor, things like that.
So different strategies, different
Yeah.
customers.
Okay.
And this Motley Fool article dives into how those strategies have actually played out in terms of growth,
Okay.
specifically looking at the period between 2018 and 2023.
Mm-hmm.
What stood out to you?
Between 2018 and 2023, both companies experienced some pretty significant growth,
Yeah.
but in different ways. Dollar General took the slow and steady route, really focusing on expanding their store count aggressively.
Right.
They opened thousands of new stores across the country during that time.
Makes sense given their focus on those underserved rural areas.
Yeah.
More stores means more access,
Yeah,
right?
exactly.
But what about Five Below? How does their growth compare?
Well, Five Below's revenue actually grew even faster than Dollar General's.
Wow. Okay.
But they leaned much more heavily on opening new stores to drive that growth.
Mm-hmm.
So they were pulling in more money, but it was largely because of those expansion efforts.
Okay.
That raises a question, what happens if that expansion slows down?
Interesting. So it sounds like both companies have been successful,
Yeah.
but in very different ways.
Uh-huh.
But what about the future? The article goes on to look at the 2024 forecast.
Okay.
And let's just say things get a bit more complicated.
Yes, a bit more complicated is an understatement.
Okay.
For starters, think about the external factors that could impact these businesses. Hurricanes, messing with supply chains, the rising costs of, well, everything,
Yeah.
and the potential for even higher tariffs under the new Trump administration.
Not to mention Dollar General was dealing with some drama of their own. Some pretty serious workplace safety issues.
Yes, those safety issues led to a hefty fine from OSHA and even a shakeup in their CEO position.
Yeah?
That kind of negative press can definitely impact a company.
And Five Below wasn't immune to leadership changes either.
Right.
They brought in a new CEO from, of all places, Forever 21.
Oh, wow.
Quite a change of pace.
It does make you wonder if these new CEOs will be able to navigate the challenges ahead,
Right.
especially with so many external factors at play.
And of course, we can't forget about the competitive landscape.
Yeah,
It's not just a brick and mortar battle anymore, is it?
absolutely not. The rise of online discount giants like Temu, which is owned by PDB, by the way,
Right.
and of course Amazon are putting immense pressure on both Dollar General and Five Below.
Yeah.
Everyone is fighting for a piece of that bargain hunting pie.
So we have these two companies, both facing challenges,
Yeah.
but with distinct approaches.
Mm-hmm.
It begs the question, which one is the better investment?
Right.
Well,
Yeah.
this Motley Fool article does a value check and weighs the pros and cons.
Okay.
So,
Exactly. They compare things like the price to earnings ratio.
okay.
Now, this might sound technical, but it basically means how much you're paying for every dollar of the company's earnings.
Gotcha.
A low price to earnings ratio could signal that a company is undervalued.
Oh.
In that sense, Dollar General looks pretty tempting because their ratio is quite low.
Plus, Dollar General offers a dividend yield,
Right.
which means they pay out a portion of their profits to shareholders.
Mm.
So imagine you own a slice of Dollar General. A dividend yield means you're getting a little bonus just for being an owner.
Yeah.
Can be attractive to folks who want to see a regular return on their investment.
All true, but we can't ignore those safety scandals.
Right.
They're definitely a red flag for some investors.
For sure.
If a company isn't treating its employees well, what does that say about their overall management?
Valid point.
Yeah.
And then there's Five Below.
Yeah.
They're growing faster but come with a higher price tag and no dividend payouts.
Right.
Classic investor dilemma.
Yeah.
Do you go with the potentially safer but slower growing option or the riskier one that might have more upside?
It really all boils down to your individual investment goals and your risk tolerance.
Right.
What are you comfortable with?
And that's something you as the listener will ultimately have to decide.
Exactly.
So far, we've seen that both Dollar General and Five Below have their own strengths and weaknesses.
Yeah.
But this Motley Fool article hits at something called experience retail. What exactly does that mean?
It's kind of like when you walk into a store, do you just want to grab what you need and get out?
Right.
Or are you looking for something more?
Yeah.
Something that makes the trip memorable. That's what experience retail is all about, creating an engaging atmosphere that makes shopping more than just a transaction.
Okay, so it's not just about finding the cheapest price anymore.
Right.
It's about the overall experience.
Exactly.
But how do you create that experience in a discount retail setting?
That's a good question.
Yeah.
I mean, these aren't exactly high-end boutiques we're talking about.
Exactly.
It's a challenge, but it's also an opportunity.
Okay.
The article suggests that Five Below, with its focus on a younger demographic, might actually have an edge here.
Okay.
They're already selling a lot of trendy, fun products
Right.
that naturally appeal to that experience-seeking mindset.
Yeah, Five Below is kind of like a treasure hunt. You never know what quirky thing you're going to find there.
Yeah.
It's fun to browse even if you don't have a specific item in mind.
Exactly.
Right.
So if Five Below can lean into this experience retail concept,
Okay.
maybe by creating interactive displays or hosting special events, they could really set themselves apart from the competition.
But what about Dollar General?
Yeah.
Are they doomed to be left behind in the dust of this experience retail revolution?
Not necessarily.
Oh,
Remember, they have a very loyal customer base,
right.
especially in rural areas where they're often the only game in town.
Yeah.
For those shoppers, convenience and value will always be top priorities.
And let's face it, everyone loves a good deal.
Exactly.
That's Dollar General's bread and butter.
Yeah.
They might not be the flashiest,
Yeah.
but they consistently deliver on price.
And to their credit, Dollar General isn't just sitting back and doing nothing.
Okay.
They've been experimenting with new store formats and product offerings to appeal to a broader range of shoppers. For example, a couple of years ago, they launched a new concept called Pop Shelf,
Interesting.
aimed at suburban women with slightly higher priced items.
So they are trying to diversify.
Yeah, they are.
It sounds like both companies are trying to evolve in their own ways. But let's not forget about those potential tariff increases we mentioned earlier.
Right.
That could throw a wrench into things, couldn't it?
Absolutely. The possibility of higher tariffs under the new Trump administration
Right.
is a big question mark hanging over both Dollar General and Five Below.
Yeah.
Remember, both companies rely heavily on imported goods. So
Yeah.
increased tariffs mean higher costs for them.
Which, of course, could cut into their profits and make investors nervous.
For sure.
We've already seen how much pressure they're facing from inflation and competition.
Yeah.
Adding tariffs to the mix is like, well, adding fuel to the fire.
It's a delicate balancing act.
Yeah.
They're trying to keep prices low for consumers
Right.
while also managing their own costs and generating profits for shareholders.
Of course.
Tariffs just complicate the equation.
And speaking of complications,
Yeah.
we can't overlook those leadership shakeups we discussed earlier.
Mm-hmm.
Do we have any clues about whether these new CEOs can steer the ship in the right direction?
That's the million-dollar question, isn't it?
Yeah.
Unfortunately, the article doesn't offer any concrete predictions.
Okay.
It's still too early to tell how these new leaders will perform in the long run.
It's interesting that Dollar General's new CEO is actually their old CEO.
Yeah.
Who came back after his successor got entangled in those workplace safety issues.
Right.
What do you make of that? Does it inspire confidence?
I don't know.
Or suggest they're stuck in the past?
It's certainly an unusual situation.
Yeah.
It's possible that the board saw him as a steady hand during a turbulent time.
Right.
Or maybe they simply couldn't find anyone better.
Yeah.
Time will tell.
And then there's Five Below's new CEO coming from a fast fashion background at Forever 21.
Oh, wow.
That's quite a leap.
Yeah.
Going from trendy clothing to bargain bins full of everything under the sun.
It will be fascinating to see what she brings to the table.
Right.
Maybe her experience in a fast-paced, trend-driven industry
Yeah.
will translate well to Five Below's model.
Perhaps a fresh perspective is exactly what those companies need.
Yeah.
But ultimately, their success hinges on their ability to adapt, to innovate, and to keep delivering that value proposition to their customers.
That's the key.
Yeah.
And it's something we'll have to keep a close eye on as this discount retail story continues to unfold.
We've spent this deep dive comparing Dollar General and Five Below. Two very different companies trying to navigate the choppy waters of discount retail.
Yeah.
They both got their strengths, their weaknesses, and a whole lot of external factors swirling around them.
Right.
So where does that leave us?
You know, it's easy to get caught up in the challenges, like
Yeah.
the tariffs, the competition, the leadership changes.
Right.
But I think it's important to remember that both Dollar General and Five Below have shown resilience in the past. They've adapted to changing consumer habits. They've weathered economic storms, and they've continued to grow.
So despite all the uncertainty, you're feeling optimistic about their future.
I am, because at the end of the day, they both provide something that will always be in demand.
Oh.
Value.
Right.
People will always be looking for ways to stretch their budgets.
Yeah.
And Dollar General and Five Below offer that opportunity.
Let's break it down.
Okay.
What specifically makes you bullish on Dollar General?
Well, they've got that massive footprint across the country, especially in those rural areas we talked about.
Right.
For many communities, Dollar General isn't just a store, it's a lifeline.
All right.
They offer essential goods at prices people can afford.
Yeah.
And that's a powerful position to be in.
And on top of that, they're consistently profitable.
Yep.
And they pay out a decent dividend, which is a big draw for investors.
Exactly. And while those workplace safety issues were a definite setback,
Right.
it's worth noting that their new CEO, who is actually their old CEO, has a track record of success with the company.
Yeah.
He knows the business, he understands the challenges, and he might be just what they need to get back on track.
Okay, Dollar General check.
Uh-huh.
But what about Five Below?
Yeah.
They seem to be facing even tougher competition
Yeah.
from those online giants like Temu and Amazon.
True, but they also have some unique advantages.
Like what?
Their focus on younger shoppers, for example,
Okay.
gives them access to a demographic that's less price sensitive
Right.
and more likely to be drawn in by trendy impulse buy items.
They've really tapped into that treat yourself mentality, haven't they?
Yeah.
Even in a tough economy, people are still willing to spend a little bit of money on things that make them happy.
Right.
And Five Below does a great job of providing those little bursts of joy.
Yeah.
Whether it's a funky phone case or a squishy stress ball.
Right. And then there's the potential for them to really embrace this experience retail trend.
Okay.
If they can create those fun, interactive shopping environments
Yeah.
that draw people in, make them want to linger,
Right.
they could have a real edge over their competitors.
So it's not just about selling stuff. It's about creating a vibe and experience.
Exactly. And I think that's a key takeaway from this whole deep dive.
Okay.
Whether you're a shopper or an investor, you have to look beyond the surface.
Right.
What's the company's story? What are their values? How are they adapting to the changing world around them?
It's about understanding the nuances, the strengths and weaknesses, the potential and the risks. There's no easy answer, no guaranteed winner.
And that's what makes investing. And frankly, just navigating the world in general so interesting.
Right.
It's a constant process of learning, evaluating, and adapting.
So as you think about Dollar General and Five Below,
Yeah.
whether you're considering adding them to your shopping list or your investment portfolio, remember that there's no one-size-fits-all answer.
Right.
It's about finding what works for you based on your needs, your values, and your goals.
And one last thing to ponder.
Okay.
We've talked a lot about how these companies are adapting to the current retail landscape.
Right.
But what about the future?
Yeah. What about you?
How might things like artificial intelligence and automation impact the discount retail world?
That's interesting.
Could we see AI-powered shopping assistants, personalized recommendations based on your past purchases?
Now, that's something to think about.
Yeah.
The world of retail is constantly evolving, and it's going to be fascinating to see how these companies continue to adapt and innovate in the years to come.
It certainly will be. And on that note, we've reached the end of our deep dive.
Wow.
We hope you've enjoyed exploring the world of discount retail with us today. Until next time, keep learning, keep questioning, and keep diving deep.
Thanks for joining us.